Okay, welcome back, guys. We're going to get right into the stock market technical analysis. All right, I'm going to get right into it. I don't want to spend too much time talking about other stuff. We'll just get into the charts. I'll try to keep it short. First things first, triple Qs. All right, we had a gap up this morning. The key level of resistance was about 269.80, 270, right in here. Okay, you'll see it's basically right here. That was your former June lows. And recently, you can see we dipped below it. We were back testing the last couple days, but today's price action changes things. So we gapped up, and if I go down to the hourly chart on triple Qs, you can see we basically gapped up. We've come back down to that support area of 269.80, and we're bouncing off of that. So that's holding right now. That is holding as support. To further compound that, we do have bullish divergence on the daily chart. And it's also there on the hourly. So in general, the market's set up to rally. We're back above support. And that basically signals that this price action, this drop right here over the last 2 weeks or so is a bear trap. So, that's it. I think we're set up to rally. Now, the way I'm trading it is I've basically covered my shorts as we started to fall down into that gap down towards that 270. I started covering all my shorts. And I've actually started to take long positions. Now, how will I trade this? For me, it's all around this 270 level. So as long as we can hold and don't really dip back below, especially with the daily close below, if you have an intra-hour dip below and they step in and buy it, that's no big deal. But if you have a daily close below 270, that's going to be bearish, and that's probably going to signal that we're going to actually have that crash. That final crash. I have been looking for that, and I still think that's coming. I still think we are going to get that final crash. I just maybe not yet. Maybe we're going to have a bear market rally first and then get the final crash. So 270, a daily close below 270, I want to be short. And as long as we can hold above 270 on the daily closes, I want to be long. Let's look over the bond market, because that's obviously been a key factor in this market, is the bonds and the interest rates. TLT, you can see, making a new slightly lower low today, which means interest rates are continuing to rise. So that is, we're not, as long as interest rates continue to rise, it is going to continue to put pressure on the tech stocks. So understand that. So if TLT continues to fall, then triple Qs is going to have a hard time rallying. But triple Qs does have, or not triple Qs, TLT does have bullish divergence on the daily chart. Just kind of barely hanging on to it here on the PPO. You can see it's just barely there. So any further down, and we're going to probably take those out, it's going to be pretty bearish. So there are things going on, and we are at a kind of a critical pivot point. We're just off that 270 area on triple Qs. So, these should rally soon. If we don't see these rallying, these bond, the bonds, there is the potential for that crash. So I am watching that. If I go to the hourly, you'll see here we're basically in this downward price channel on TLT, pretty clean channel, and it is just continuing lower. This morning, basically hitting the lower end of that support channel. So I suspect we bounce here up to the top. But at the end of the day, we need to see a breakout out of this channel to signal that the interest rates are going to start to come down a little bit. The market needs the interest rates to come down if it's going to have any sustainable rally. Tesla. So Tesla is, kind of bouncing with the market today. Earnings coming up here pretty soon. There's a lot of risk to take a position right ahead of earnings. In general, just my general outlook right now is I don't really want to be short tech stocks or growth stocks, speculative stocks like Tesla, while the triple Qs has that bear trap in play and we're above that 270 mark. So just looking back, as long as triple Qs is going to continue to rally, then those growth stocks should continue as well. And that's it. It's really as simple as that. So basically, long triple Qs, nothing aggressive right now. I'm still waiting to see things shape up. I'm not going in super aggressive, but we'll keep watching it. And then the other thing is the bond yields. If bonds do get some sort of a buy signal here on TLT and we do get a breakout, yields are going to come down, and that will be very bullish for gold and gold stocks. So that's kind of the play I'm looking to play for the next setup is, the potential long gold stocks. If we see, the interest rates starting to come down for whatever reason. Right now we're in a downward channel. Interest rates are continuing to rise. We don't have a buy signal really in gold or gold miners. We don't have a buy signal in these bonds. But I'm on the lookout for it. So pretty simple today. I'm going to keep a lookout for individual trades, and I will get the video out. All right. Thanks, guys.